Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. That's OKC CFA CFP on Twitter. And I wanted to answer another question I've been getting recently from clients, which is what are the effects of President Biden's tax rate hikes on the market? And I think specifically what folks are asking is what happens if the capital gains tax goes up? Biden has certainly proposed some leveling of the tax code, right? Saying, hey, if you have capital gains, you need to pay as high a tax as folks who have regular income, right? It's still money to you. Why are you paying less in capital gains taxes? On a go-forward basis, it looks like those gains rates may go up to about 28%. Right now, they cap out at about 20%. So what impact does that have on the market? Well, in the short term, if we see additional policy that does cement those tax rates firmly into place for 2022, we're going to see some selling towards the end of the year as folks that were perhaps in a long-term liquidation plan of a concentrated position, perhaps just need some cash over the next few years. If you get a lower rate in 2021 that you're going to get in 2022, 2023, 2024, it makes sense to realize many of those gains now. Now, whether those assets get reinvested is, only time's going to tell on that one. I think for the large part, a lot of folks are going to withdraw some dollars from the market, stay in cash on a go-forward basis, at least to a little bit of a larger degree. That will create some selling pressure in the short term. Over the long term, capital gains rates increases decrease the incentive for folks to put dollars into the market. If you buy a stock at 100, sell it for 200, you have a $100 gain. If the government takes away 28% of that gain versus 20%, right? They take an additional $8 extra, that incentivizes folks to invest for the future. Makes much more sense to spend now, makes much more sense to just spend things on lavish things versus investing for the future. America is built on capitalism. It's built upon investing dollars now in production to add productive assets and make additional dollars in the future. Ultimately, if you tax that activity, you will see less of it. That's how taxes work. As you tax something, you see less of it. As you incentivize something, you see more of it. So as you see additional capital gains taxes, you will see less overall investment in the economy. You see less capital expenditures because folks just say it's not worth it if I'm going to be taxed so much. So that's the sort of the short and the long-term impacts of President Biden's tax hikes. Again, I think it's reasonable to expect some tax elevation. There's been a lot of government spending. We have a lot of programs going into place. I think it's good we're not seeing draconian policies, 40, 50%. That would have a real substantial impact. But on a go-forward basis, if we see gradual tax increases in terms of capital gains, as long as they're sort of moderate, it won't have a tremendous effect. Again, those draconian increases, 40, 50%, that's when you really start to scare investors. If you want some additional information and analysis throughout the week, feel free to follow me. As always, it's OKC CFA CFP on Twitter. Until then, I'm out.